So you pulled our numbers again, right? Thank you for doing that. What do you got, Danny? How are we looking?
Well, it's interesting. It's interesting, right? So we're still in the cool period of the market, right? The winter times. But as we look at where we are now compared to this time last year, things are actually turning around a little bit, right? So if you look all the way across the chart here for homes sold, we were down from last month, but compared to January of last year, we're actually up 4% in terms of the volume of homes sold, which is interesting. We did, it was 1,315 houses were sold last month, which is not a lot. But again, this time of year typically is the bottom, and then things start to turn around in February.
February 24 versus February 24 of last year, right? Okay.
Yeah. So 1,268 last year, 1,315 this year. That's encouraging.
Yeah, that's positive. Hopefully we keep changing that way.
The big one, though, is the next one, right? When we look at list price compared to sales price, and this, too, is one that is similar to last year in terms of the spread. Things are still going on average lower than what they list for. And you can see that gap has been pretty consistent for the last couple of months. But if you scroll your eyes back across to that low point last year, it was January. And what's telling about that is while things are down from our highs in the summertime this year, we're still up, what is that, $41,000 over the average sales price of January last year. So the market right now is just, the feeling is totally different, right? Going from, the 3% rates to the 4s to the 5s up to the 6s and above where we were this time last year felt totally different than going to the 8% range and coming back down into the 6s. And so I think there's some of that that's at play here. I don't know. What's your take on this?
Yeah, I think some of the trepidation is easing now that we're off of our highs. It's a big deal to be back down from 8%. So we'll see. So we've been tracking these numbers a couple of years now. We are consistently up year over year, same time period. That's been pretty consistent. I don't think, obviously there's a high part of the year, it tends to be summertime, but I don't know that we've been down below the previous year seasonally. Ever.
We've not been, but
at least since we've been tracking, right?
Yeah, and you're right. The thing is that recently, though, as we've been tracking, especially over this last year, we've still been up, but the spread has not been this big. This is a really big spread, and over the last few months, it's been a lot tighter. Something is definitely different about this January compared to last January, and I guess we'll see what happens in February. But I think this is all very encouraging in terms of the level of activity in the market. Might be coming our way here in the spring.
I see. Yeah. Yeah, it's encouraging. Now, I know we don't do the market gauge anymore because it's been pegged into the seller's market for so long, but I know that your donut graphic, this is over under asking, that's changing quite a lot, right?
Yeah, and this one's always interesting to me because the thing that doesn't change month in and month out is that big blue section. Those are the houses that sold within plus or minus 5% of their listing price, right? So they pretty much went for what they were listed at. So anything in the green or the orange are the extremes. So green is anything that went more than 5% above asking, and the orange is the opposite, anything that went 5% or less. And you can see that really what's happened over, since things were hot in the summer, is that green section has been trading with the orange section. And this is about as small as we've seen the green section at just 7% of sales that went 5% or more above asking. And again, this is a thing that happened last year. This appears to be mostly driven by seasonal factors. As things slowed down, there's just less competition for the inventory that's out there. And we start to see things going above asking less.
Yeah, and another indicator here is days on the market and the sales with price reduction. Those both seem to be at a high point relative to the rest of the year, rest of the market, but not that high.
Yeah, and that's really what, the rest of the charts here are just about. Look at where we were compared to last year. Boy, isn't that similar. January of last year, we had 30 days on market. On average, here we're at 33. The median was 14 days. This year it was 16 days, right? But you can see the trend. After January last year, things went up a little bit more and then came back down. And you can see that they really went down quite a bit as we got into the more competitive selling time of the year.
Yeah, so I think it's really helpful to track it seasonally year over year, like we've been doing, that's really revealing as to what to expect coming up. And unless we deviate for that pretty significantly, I think we're on track for the same this year. But with more volume as rates continue to decline, it's all over the news. The Fed has not actually moved anything, but the market's moving. The market is acting like they have already moved, and we're going to expect a very busy year this summer. So gear up, Danny D. Thanks as always for tracking the numbers here. We'll keep you updated.